Hey there, everybody. Welcome back to the Finding Financial Fitness Show. I'm Nino, back with Pay, and we have a special guest today, Christina. Before we dive into it, though, Pay, I want to give our audience just some context to the fact that we haven't recorded in almost 5 months, 4 months now,
Really that
which,
long?
yeah,
Took like
we recorded our last show right before my birthday. I remember that, which was about 4 months ago now. So a lot has happened. A lot has gone on, which I'm super excited about. But for people listening, they're going to be like, what are you talking about? A show was just released last week. You guys are crazy. But it's just for us, it's almost like starting over, it feels like. Because, I mean, as you can see, Pay's in a whole different setting. We have matching t shirts, which we'll talk about at a later show. Like, there's just a lot going on, which I'm super excited. I'm grateful to be back. But today is not about us. Today is about a friend of the show. We call her Coach Christina, but it's about everybody's favorite topic. Everybody loves talking about this:
absolutely.
taxes, 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 taxes. And if you don't like talking about it, and if it's not on the top of your mind, you're doing something wrong, because taxes could be the key to saving and making you a lot of money. So, Christina, welcome to the show.
Thank you. I appreciate it. Thank you guys for having me.
I think it's a long time coming, and one of the biggest questions that we get asked, and oftentimes people will ask us this question even before they've done anything when it comes to investing. It's I don't fully agree with the question all the time. The question goes along this lines of, well, I'm worried about investing because I don't want to pay taxes. So
Mm.
people, that's sometimes an argument. And I'm like, okay, so you don't want to make $1,000 because you don't want to pay $100? You know what I mean? It's the questioning's kind of there, but I understand it from a tax perspective because it can be very, very, very overwhelming when it comes to taxes. And we were talking before we got on that there's probably a million questions between Pay and I that we can ask, and we've always wanted to ask now that we have somebody on. But we've had the pleasure of working with you in our business capacity, and you clearly have a lot of knowledge in this field. So we wanted to bring you on, and let's get started with a little bit about your background. Who's Christina? And did you always want to become an accountant when you were like in elementary school? You were like, I really want to do this. I really want to become an accountant. Tell us a little bit about yourself.
Oh man, my journey has been all over the place in life. And no, actually, no. In all transparency, growing up, I was actually going to be a cosmetologist, a beautician. I want to do hair and makeup and all that. I love clothes. I love all that great stuff. And but when I got into high school, junior and senior, one of my classes in my senior year was accounting. And I fell in love with it. I fell in love with I've always been a math person, so I fell in love with the numbers, et cetera. And then my journey kind of ended up in life. I got married young, I had kids, et cetera, et cetera. So I didn't start my accounting career until I was in my mid to late 20s. And from there, actually, I shouldn't say that. I started it very early in life, but getting into actually public accounting didn't happen until my mid to late 20s. So then I decided to go to school. I was not living here in Nebraska, which is where I'm from. I moved back here about 26 years ago, found the fantastic job that I have right now with the public accounting firm that I work for. The goal at that time was for me to get my CPA and take over the firm. Um, God took me in many different directions, and one of the main directions he took me in was taking care of my parents. And so, struggling with trying to raise a family, work a full time job, take care of my parents, the CPA thing did not happen for me. I worked on it. There's four exams that you take. I did pass one of them, but once you pass the first one, it starts a clock. And I just didn't happen. So, anyway, I evolved into managing the small business department at my firm, and which is where I'm still at. And I love that. I love working with people. I love helping them understand how taxes impact them, how their books work, and the balancing aspect of all of it. I say running your business and doing your books run in parallel. They have to be in tandem. And so, anyway, so then a few years ago, I decided I really wanted to get into the investing world. I wanted to get into real estate. We have a number of our clients who are very, very wealthy, and they're in commercial real estate. And in doing their books and looking at the different things, it was like, I can do this. So I kind of ventured off a little bit and got into real estate and found some very painful things with it that I don't like, but a lot of great stuff with it. And so then that just started my journey in all the other things that I'm involved in. So owning a franchise, owning a moving company in San Antonio, getting into learning about the snowball and IBC, and I just love that aspect of it. And then knowing, even though I started off late in life about trying to get myself into a healthy retirement wealth, I feel like I'm on track to be there now where I didn't feel that in the last few years. That's kind of a little bit of my background.
Yeah, we'll definitely touch into the buying and selling the business component of it. We've had discussions on the podcast about it, but we probably would have to just have you back on just to talk about business acquisition to even start with. But I mean, you mentioned 26 years ago. I thought you were 26, Christina. Why are you lying to us? You cannot have been doing this for so long. People are looking at
I
you on YouTube right now and like, how old is this lady? There's no way she's older than 26.
And
I
actually, you introduced her as Coach Christina. So you want to talk a little bit about that aspect of your professional life as well?
Yeah. So, actually, yeah, I guess I didn't even, that's another business that evolved out of all of this. So, in dealing with all the real estate, all the networking, right? So, all the networking that I do in all the communities, it just came to light as I was learning and working with people that, so they get preached to, you can get into real estate, you can buy real estate, you can sell real estate, and you can make all this money. And that's what they focus on, right? We can take you under our wing, we can set up your entities, we can do all this stuff. And then they have no clue what they're doing. They have no clue what they're setting up. They have no clue that these entities have to file tax returns. They have no clue that books have to be done. They just don't know what they don't know, right? And so the more that I started networking with people, and I never thought about what I do for a living needed to be top of mind with people. I just was trying to network to get into the real estate aspect and learn the real estate, not realizing I was bringing something important to the table. I always thought, in these networking groups, well, what do I have to say, right? I don't have any experience in real estate other than doing clients' books and tax returns, right? So once I learned what I can bring to the table and people started asking my advice and my help and whatnot, I developed this coaching program, and I took a coaching program to develop that. And it's one of those things that so many people need this. And once they realize they need it and they realize, I try to catch them early on. So it's a pay me now or pay me later concept, right? You're either going to pay me now to help you, or you're going to do your own thing and realize I need somebody to help me. And then you're going to come to me later on. And that's usually what happens. But I like to try to catch people early on when they're starting their businesses so that they're aware of what they need to do. So I developed also this coaching program, and I have then taken on clients that I do bookkeeping for. So I do all the things, and then I bring them under my wing if they want to have their tax prep done. So I help them with their books, whether they want to do it themselves, I coach them. If they want me to do it for them, I will do it for them. And then if they want me to prepare their taxes, I just bring them under my wing for tax preparation at the firm.
Isn't that something? I mean, that's such a good quote about pay me now or pay me later, because man, that is so true. That is so true. But thank you for sharing that with us. I think where I want to pivot first and foremost now is I don't want to minimize the traditional hardworking W-2 American, because nothing wrong with that. But I think a lot of this show is going to have a lot of investors, a lot of real estate investors that have a little bit more complex tax situations. So that's kind of where I wanted to kind of dive into. Again, there's nothing, we're recording this early March, and so we're right in the middle of tax season. So again, thank you for Christina for coming on and taking time away from that. And so hopefully people will get some insights for what they can do, maybe not this tax season, but potentially the next year and the subsequent years. So I want to kind of go into one of the things that when I pivoted from doing the TurboTax, right, just submitting my W-2 online and that was it, to then I need to get an accountant because now I have 1099 contract work. Now I have an LLC. Maybe I'm going to go buy a rental property. One of the first things and this was no matter what time of the year, one of the first things the accountants that I would discuss with would say, okay, we're going to file an extension for your tax. And I'm like, why? The deadline is April 15th. But the more and more I get into this, more and more I talk to accountants and business owners, they're always like, it's inevitable. You're going to delay your taxes. If anything, you're actually silly if you file on time, is what I've heard. Pay the penalty. So talk to me a little bit about that. Why is that such a common practice? If there's a deadline, why do accountants say, let's extend your taxes?
So we say extend your taxes because it takes time. So again, in talking through the businesses, there is so many things. So when you file a corporate tax return or a partnership tax return, you have what's called a Schedule K-1 that kicks out of that return and it flows into your individual return. So that's just one piece of the puzzle. So that return has to be done before that information can flow into your return. Okay. So if you are partnered, if you and Pay are partnered together and you're trying to prepare your tax return, that partnership return has to be done and kicks out a K-1 to each one of you. If that partnership return takes a while to prepare, there's no way you're filing your April 15th taxes. You have to wait for that partnership return to be done. That's just one tax return. If you have multiple businesses, and this is what I run into, if you have multiple businesses, you have to wait for all those K-1s to flow into you. And you have to wait. And sometimes if those businesses are what I say very meaty, if they're very involved and have a lot of transactions and have a lot of accounts that need to be reconciled, it takes time for somebody to do that. It takes time for the accounting firm or the bookkeeper or whatnot to pull those numbers together and make sure that they're right. Plus you have tax planning that goes along with it, which starts towards the end of, so we do tax planning. We start that October, November of the year before. So like for 2024 year end, we would start October, November, December planning for that. And then we know where you're at for the next year. And so it's extremely important to understand. And that's actually one of the first things that I make sure that people understand when they're coming into this and when I'm working with them. You do understand that you have to file an extension for your return. I make sure that they're aware of that because a lot of them don't get it. They don't understand it. And for the very small ones, it's not a big deal because we can get their books done, we can review their numbers, and they can still file timely. But it's still, you have to file the extension for the partnership piece of it. And then you typically have to file the extension for your individual piece of it. One of the things that we've said for years, I always heard my boss say, and I've taken that on, is you have to, if you're not going to be okay with filing an extension, don't get into business. Just don't. Just don't. Because that's the nature of the beast. It just is. And you have to be okay with it. So that's important.
So can we back up a little bit? Because I think myself included is before I started doing all my business and whatnot, I didn't understand the difference between a bookkeeper versus a, CPA versus a tax strategist. And, can one person do all of it or it always has to be separate? Can you kind of give us a little bit of detail on that?
So you do have your different levels, right? So I personally, I don't really like being called a bookkeeper because I do more than bookkeeping. Because I have so many years of experience, because I do tax prep, because I do all of that. But your bookkeeping is kind of your entry level, is somebody that can, understand where your transactions need to be recorded. They know the differences between assets, liabilities, equity, what your profit and loss should show. They know how to reconcile a bank account. They know how to reconcile credit cards. They just know how to put everything in the right bucket. Okay. Then you have your little bit of a next level, which is kind of your accountant, is what we're called, right? So that level is a step up, kind of in between a bookkeeper and below a CPA. So really, if I was studying and taking my exams and I passed the exams today and I was done, I don't have any more knowledge right now for me personally. I don't have any more knowledge right now than I had before I got my scores. It's all in that experience. And that's the other piece of it too, is that you can have somebody straight out of college they took all their college courses, they sit for their CPA exam and they get their CPA. Just because they call themselves a CPA doesn't mean they have all that knowledge and experience to be a tax strategist, to know all the things that somebody that has been a CPA or an accountant for many, many, many years would have, right? So you have those different levels of people. Tax strategists can marry up with the CPA. So like my boss is very much tax strategist. He is very, very, very good at looking at the big picture. And that's the other piece of it, being able to look at the big picture. So looking at your business returns, looking at your individual returns, and looking at the whole picture and understanding these are the different things that you can do to minimize your tax liability. So going back to what you were saying in the very beginning, Nina, with, people don't want to invest because they don't want to pay taxes. There's so many things that can be done to minimize the tax liability. You just have to be able to know who you need to go to help you with that. And I actually have a gal that I'm just took on doing her tax preparation for 2024 individual return. She's got a few little itty bitty businesses, but she's never used an accountant before to prepare her tax returns. She has no idea how it works, what she's supposed to do. And with that, she found out there's a property tax credit that we get here in this state for property tax, Nebraska property tax credit. And then it ends up getting you a refund on your return typically. Well, she filed the last 3 years and didn't know anything about it, right? So she's got all these credits left sitting on the table. When you start getting into business ownership, business being an entrepreneur, whatnot, it's really advantageous to level it up, right? To go that next step and say, I've always done my return, W-2, TurboTax, Nino, etc. I need to now get somebody else that can help me make these decisions so that I am taking advantage of everything that's on the table. So those are the kind of the different levels of people in that field.
I think that was a good question, Pei, because I think that's where a lot of people get stuck. I mean, just I've only been an investor for nowhere near as long as Pei, maybe less than 5 years. And I mean, between that time, I've already had 3 or 4 different accountants. And I really do feel like second to who you marry, your accountant is probably the person you want to spend the most time getting to know, because they're going to see the ins and outs of, ideally they would, if you have businesses and entity structures, they're going to see a lot of what you're doing, and you're going to want them to understand and match you personally, how you are, how your personality is. I swear, every time I remember, I would have these high expectations of my accountant. They would be a CPA. I would call them, hey, I need to do this. And of course, selfishly, I think that my case is the most important, not knowing that they have a bunch of other clients. I understand that part, but it always just felt like there would be weeks to get a response. And at that point, if the tax planning isn't prepared well enough in advance, well, then it is a time thing, because if things aren't done in the calendar year, well, then you're missing out on deductions or different things that you could potentially be doing. And so for people listening, I would highly encourage you that, just like you would with a spouse or seeing a therapist, you want to really get a feel for the relationship dynamics with you and that other person, because ideally, whether you're just starting out or whether you're a seasoned investor, you really want to have this connection with this person for a very long time, instead of what I had to do 3 years in a row, where it was explaining myself and my background every single time to start over and say, here's what I've done. And then it's boom, next time. It's like a breakup. Then I have to explain again the next time. Yeah. This is all of my history. This is who I am. So I think the sooner you can find the one accountant, I think the better. It'll just make your life so much easier. And going on that, why I think it's so important is because I've met accountants on a big range. So the tax code is very big. It's a very big book, right? And I've talked to multiple accountants who are on both ends of the spectrum. And I want to know your thoughts on all this. I've had accountants tell me that have been my personal accountant or not, that will say, okay, the tax code is what it is. You cannot write this off. This is what it says. We're going to be ultra conservative. This is it. No subject to interpretation. And on the other side of the spectrum, and Pei, I see you nodding along. I know you have experience with this. You have the accountants who are like, oh yeah, you can write that off. Well, technically you can write that off. well, it's not going to matter. You're never the chances of you getting audited are slim to none. Oh, you can take the risk. And then oftentimes you have the good accountants, I would say, in the middle, who are like, hey, you can potentially write this off, but just understand, how are you going to justify this in an audit? How are you going to explain this? How can you sleep at night, kind of thing. So, Christina, talk to me about how you personally, because I'm pretty sure you have clients that who are on both ends of the spectrum. How do you address the whole taking deductions and that thin line when it comes to the tax code?
It is at the end of the day, it is a put on your big girl and big boy panties, listen to what I have to say, and make the decision. You end up making the decision, okay? But yes, there are people out there, accountants, that they are not anywhere, they're not going to stray from the code at all. This is it and done. You're going to have those ones in the middle, which I really feel like my boss is that way. He's very much in the middle. He's very aggressive, but he knows he pushes the envelope, but he knows, no, don't go any further than this. This is where you need to stop, because this is what's going to happen. And not only are you at risk, but it's putting me at risk, my license at risk, and I'm not doing that. So when it comes to those kinds of situations, what I say too, as I'm talking to clients that I'm taking on, that I'm coaching or whatnot, I have no problem whether, if I meet with somebody and we don't click, I have no problem with you not using me, because not everybody clicks. Not everybody gets along. Personalities, energies don't fit always. But find somebody that's going to help you. And so, like you said, Nino, if you, and it sounds like, Pei, you've been in that situation where you have to understand your own level of risk taking. And you have to sit down with that accountant, let them explain to you, here's what you can and can't do. This is what I'm going to express to you. You can write this off, but this is what's going to happen if you're audited. Yes, audits are very low, especially with our new administration, right? We've been low with everything that's going on. They're probably going to stay low, but they still happen. And so you have to be prepared that if you are armed with all of the information and you choose to make a decision and you're audited, you have to know what you need to do to, first you have to get audited. You have to know then what they're auditing, and then know from there what you need to do to support that audit. And so you need to make sure you have that information to support the decision that you made. And same thing like with investing, right? If you're risk adverse, you're going to want to be very careful with the information that you're given, whether you want to deduct something and be aggressive with it or not. Again, going back to the bookkeeper, the bookkeeper, if you have a bookkeeper, they know what buckets to put things in. And then your accountant and your CPA, your tax preparer, et cetera, from there knows what to do with those items to be able to give you the tax benefits that you need. So yeah, it's important to know what that spectrum is and know where you fall on it.
I was just going to say, it's almost like assembling your Avenger team, where, like Robert Kiyosaki actually writes about this in his book, where
Yep.
you want to make sure you have a good CPA or tax strategist on your team. You want to interview your attorney. You want to have and most of the family offices, once your investment gets big, you do want to have a team that you can just, you don't have to kind of like Nino was saying, right? Re-explain what you're doing. That's why I find that it's so valuable that you understand IBC, you understand the income stacking, you understand all the investments that's been paraded around, right? Because we talked about the investment buffet before. And even if you're not in that particular investment, at least you're aware of what people are doing. Right. So I just find that super helpful, because it cuts down on the interview time.
Yeah.
Because you kind of already know what people are up to, and it just makes it easier to talk to you.
Right.
Because I don't have to spend an hour explaining how I'm moving my money around.
Exactly right. Yeah, exactly. That's it exactly. And it is important to know and who you're working with, that they do understand what you're doing. And that's one thing that we definitely pride ourselves on, me, myself personally, and me, and through the firm and my boss, is that's part of our job too, is being able to wrap our heads around what our clients are doing, because if we don't understand it, we don't know how to best serve them. So you have to know, again, it's not something that you actually have to do. I have the benefit of actually doing it, doing IBC and doing the snowball and whatnot. So I live it. So I can really explain it and be able to direct people with it. But at a minimum, even if I weren't doing it, it's important that I understand it, because we deal with all different types of businesses, doctors and construction and commercial real estate, residential real estate. We deal with all tons of different kinds of businesses out there. And it's important to know how they all work. And that's the nice thing about bookkeeping. Yes, there's an array of how books are done, but at the end of the day, there's still all of the same transactions, and the bottom line, no pun intended, is that everything should be in its buckets so that you know and can make the best decisions that you can make to run your business. If you don't know what your money is doing or where it's at, you can't make decisions for your business. If you have money in the bank, that doesn't mean you made money. If you don't have money in the bank, that doesn't mean you lost money. There's a huge difference with cash flow, right? If you're buying things and you're investing things and all of your money is gone because you're investing versus taking that money and just distributing it to yourself and blowing it, you need to understand what you're doing with your money and how you can best serve yourself to grow your wealth, grow your snowball, do all the things with IBC. And yeah, it's absolutely important to understand all of that for our clients.
I mean, it's something to be said if you're working with an accountant who understands, and actually in your case, Christina, is actually implementing the same things that you're doing. Because you can't be more frustrating than to be learning about all, and I know that we are in the alternative investment space, but I can only imagine people listening, trying to incorporate these things, learning about it, reading Nelson Nash's book, reading Dibs, reading all these different things, and then going to their accountant who's a 401k specialist and saying, no, 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 don't do any of that stuff. You need to put all that into the 401k. It's like you're right from the get-go. You're already setting yourself up to fail because you don't have somebody who understands you for who you are. And again, I go back to the relationship aspect of it because that goes beyond the technicalities of how much the quote unquote rate of return is. That's something that's far, far greater and takes up the majority, in my opinion, of the tip of the iceberg, if you will. So with that, I do want to kind of give people some just generic information with when it comes to different strategies, but deductions. You mentioned Nebraska, for example, that there was this write-off that this person could implement, given the fact that they had a property there. And I know this is going to vary state to state, but what are some common business deductions that you feel are important for investors to know that maybe they don't, or things that maybe revalidate what people are thinking already? For example, one of the most common ones is, well, can I write off my vehicle? I'm a 1099 contractor. Can I write off my laptop? What are some just common deductions that you see that are, and I know this isn't always disclaimer, not legal or financial advice. Always consult with your personal accountant and attorneys. But what are some general things that you see, Christina, that you think people should know?
Right. And that's actually a great disclaimer because everybody's situation is different. Every situation is different. So what one can do, another one can't, right? So, one of the big ones, yeah. So mileage or writing off your vehicle, understanding how that vehicle is used in the business. If it's part personal, part business, it has to be split. You have to keep track of your mileage. Meals and entertainment, people need to understand there's different types of meals and entertainment. There's your 100% deductible meals. There's your 50% deductible meals. Travel, you have to be careful with travel. Travel is 100% deductible, but you have to be careful what you're doing that for, right? So if you're traveling somewhere on vacation, but you stop over for, to check out your residential, rental property, I mean, you have to be careful kind of what you choose and how you deduct those certain amounts. But again, remember, you have to be audited for them to drill down into all this stuff, and they have to be choosing that to audit. So there's quite the going down the rabbit hole before you get caught with any of that, but it's still important to have your ducks in a row. So some of the other things everybody knows, depreciation, right? There's different levels of of depreciation and what you can depreciate and how you can depreciate it. If you purchase a building, you have leasehold improvements, you have, equipment that you might use within that property is depreciated differently. You have Section 179 depreciation, you have bonus depreciation. They're all used differently, and there's different ways that they're used, and there's guidelines, like for instance, Section 179. You can take Section 179, but it cannot create a loss in your business. So if you have profit in your business before the Section 179 of 50 grand and your 60 grand of Section 179, you can only take it to that limit of the 50 grand. Your 10 grand is carried over to the next year. Things like that. The bonus depreciation, that you can take that. Well, hopefully we'll go back to 100% bonus depreciation, but you can take that portion of that fully. So that can take your business into a loss. So there's those little different things there. Some of the other things, equipment. If you purchase equipment that's under $2,500, that can just be expensed. If it's over $2,500, you have to put it on the depreciation schedule, and then you have to choose, is it a Section 179 item? Is it a bonus depreciation item? But again, you have to make those decisions once the books are done and reconciled. There's all different pieces and parts putting that puzzle together. There's things like, advertising and marketing. Those are areas that, a lot of people use, right? Because we want to market what we're doing. I mean, those are all deductible. But again, if you are doing things that are marketing multiple businesses, you need to make sure that you're separating all of that into your different businesses. So again, keeping all of those businesses in their lane, right? And not right. You hear the commingling funds. Let's not commingle funds type thing. Those are some of the big ticket items.
It's a lot.
Great tips. Yeah.
Oh yeah. Like I didn't even know about the whole $2,500 thing, but I mean, but that goes back to what you mentioned, which is the tax planning part, which is where I wanted to kind of pivot to next is, okay, let's say, because this is what happened to me. I remember my last CPA, we were in March, April, they were finishing up taxes, and I'm thinking, I was learning a lot on my own about deductions, about write-offs, and I kept asking, can I do this? Can I do that? And I almost got to the point where it felt like I was almost teaching my own accountant. And that's never a good sign, right? I want to have a team of experts who are more of an expert than I am, right? I don't want to have to teach my accountant or my attorney about the law, right? You want to have people who are experts.
You're the one who Googles WebMD and go to your doctor. Hey, I need this prescription.
Yeah, exactly right. I think I have this illness. Give me this and I'll be fine. Yeah, exactly. Yeah.
Yes and no, Pay. Yes and no. I would say I'm a little bit more sophisticated than WebMD. All right. I'll go to a .org page. But yes, more or less wanting to learn on my own. And then at least, and I think most people listening to this show run into this category where it's like, hey, I'm trying to learn on my own to make myself better. Just because I learned something, I'm not saying that it's right. But if I bring it to my accountant, I would like to know, can I do this? Yes, great. No, okay, why can't I do it so that I can learn? Because you cannot, and a lot of people I think fall into this category where they think my books, my accounting, that's their job. That's not my job. But that's not true. You as an individual, at the end of the day, like you said, Christina, you're responsible for the decisions that you make on the behalf of your business and your own personal taxes. So the more you understand, the better. But I do think having a collaborative experience with your accountant and your tax prep team, and they use that word team very strongly here, makes things so much smoother. So let's assume, and going back to my example where I finished with my accountant that year, I said, okay, I know for sure next year I need to get a new accountant. And this was like May, June, I think we had finished up. And so I said, okay, well, I'll wait until January. But then I realized, well, I want to get ahead of it now. Let me start looking around for an accountant now. So that my question with this is, when it comes to tax planning and strategy, when do you feel is the right time to start prepping for the following year's taxes? And what does that look like for you? What's an ideal client relationship and frequency? Because if it was up to me and Pay, I think you'd be meeting with us on a daily basis, just calling you Christina help, which is what we do nowadays. But I think for normal people, what is a recommended frequency when it comes to tax planning and tax strategy?
So typically, what we do when October is done, so the first 10 months of the year, honestly, tax planning should really be done throughout the whole year. Okay. So anytime you want to do something really important. So again, right, the investments or buying a business or buying equipment for your business or, all the big ticket items, right? If those things are coming to play and you want to understand where you're going to be. So if you're going to be doing that, say like February or March, right? You want to be talking through it now because what is that going to look like for you for the rest of the year? Because if you buy say like for our moving business, say we buy a new moving truck and we buy it brand new. It's 130 grand. We would need to know, if I didn't know what I know, I would want to know, what can I do with it? How does this impact me for the rest of my year? So if I'm doing really well at the end of the year and I have 300 grand in profit at the end of the year, I feel like that's where I'm going to be. I can write off that whole truck. Okay. So it's things that really should be looked at throughout the whole year. Now, if business as usual is happening throughout the year, status quo, et cetera, probably start looking at the books maybe through 9 months, 10 months. So through September, October, get all the books done, have all your bank recs done, and then say, hey, okay, I need to sit down and look at this. Look at where you stand. Because if you have a ton of income through those months, what does your next few months look like? Are you going to bring in even more? Do you have a bunch of expenses? Do you have things that you can buy to offset that? That's another thing that we say. If you have a lot of income, don't be buying things just because you need to buy things, right? Buy it because you need to buy it, not just, okay, well, I bought 5 new trucks last year and I'm going to buy 10 more this year, replace those 5 I bought last year. Don't do it in that aspect, but get yourself prepared early enough on so that you have that time to make those decisions and you're not scrambling, because most businesses, and there's criteria for this, whether you're cash basis business or an accrual basis business. But if you're a cash basis business, you want to be making those decisions early enough so that if you need to buy things, you have to buy them before December 31st. You have to make those purchases so that they are qualified and in service by the end of the year, so you get that deduction. And then what we do with our clients, a lot of them, we'll start looking at them September 30th, October 30th. We look at them through November 30th. And then during December, we're looking at them like every week, because in our day and age of ACH and payments being made, sometimes you don't have control of what people pay you. So we had a client this past year that we had all their planning done. Literally, we looked at them through day before Christmas, 24th. We go to do their year end and they had a huge multiple deposits come in before the end of the year that raised their income by 300 grand. What are you going to do? It's all ACH. You have to plan for those kinds of things. And those are the questions. Client, what do you think is going to happen between now and the end of the year? What does that look like? And then you go off that basis and then, okay, stay in touch with me, because if anything changes, that changes the trajectory of what we're planning.
I feel like you have to be a very good planner because
Absolutely.
a lot of people, myself included, tend to be the tail wag the dog.
Yeah.
We don't really make the decision. We're like, oh yeah, I'm gonna, like I did, a self-admit huge mistake. Like I knew that year, I think it was 2023 or 2024, we were going to have a huge tax burden. And I scrambled, I panicked, and I bought an Airbnb just because here's a tax write-off that's going to save the day, and not really think it through, like what's the implication and blah, blah, blah.
Exactly.
Lesson learned, but it is what it is.
Yeah, exactly. And that's why you look at it periodically, because and not to panic, because you just don't know, and then you do have to understand the consequences of those choices.
Who wants to buy Airbnb?
For sale in the link below.
Nice.
Oh, no, I think those are. I fully agree. Me personally, I actually got to the point about maybe a year ago or 2 years ago where I was like, because like our personal situations, Pay and I and other individuals who invest, it's so complex. We didn't know you at the time, Christina. I figured for me personally, I'm like, I need to just figure this out on my own because I realized that I couldn't necessarily teach it to my accountant. I was relying on various experts, quote unquote, to manage it for me. But then when the time came, it was, oh, hey, Nino, what did you want to do with this back in August? The hell if I remember. Right. And so
Yeah.
I figured the more on top of it I can be, and the more on top of the responsibility that I can be, then at the end of the day, at least I understand it. Like me personally now, I do my own books. But the reason why I do my own books is because I monitor our money going in and coming out on a personal level. But then if I'm doing it on the personal level, as you mentioned with K1s, it trickles down from the business to your personal account anyway. So for me, I wanted to just get a control of it. And I too now have gone to the point where I like numbers and I like when things match up, and QuickBooks is every accountant's best friend. And so I think for me, there's a sense of satisfaction seeing everything lined up and knowing that, okay, the numbers match what I projected. But I understand a lot of people aren't like that. And that's where I think it's so important to find experts who are both really good at their job like you, Christina, but also really personable and willing to talk to you like you, Christina. I think that that's, again, a big part of the reason why we wanted to have you on. And thank you so far for all the feedback that you've given us. But I do want to end the show with one last question. And I think this is always kind of the central theme of the podcast that we have. And I think you're a good person to ask this question to because of your experience and because of the people that you work with. It's always the more money, more problems scenario, right? Where, okay, like it sounds, if you make more money because you have businesses and investments, well, now you have more problems in the sense you have pay more taxes, you have to pay your bookkeeper, you have to pay your accountant, you have to be on top of your things. So since you do work with a lot of high net worth individuals, you also work with average people. Would you say, and maybe you haven't had these conversations, but would you say that your wealthier clients, your high net worth clients, do you attribute that they have higher levels of happiness associated with having more money? Or do you find the inverse to be true?
That's an interesting question. That is dependent upon the individual, actually, is the way that
Yeah.
I see it. Because we have clients who don't have are kind of your average Joes. They don't have a lot of money and they are extremely happy. They're happy with where they are. They just want to live life and do status quo. They just want to get to retirement and be able to, sit on the porch in the sunset, right? Then we have our clients who are extremely wealthy who struggle with life. They still want to watch their nickels and dimes, and it's actually hilarious. It's like when you sit and look at some of these clients, just their interest income on their investments is 5 times what I make. And they're like, yeah, but I don't want to spend this and I don't want to do that. And it's how they kind of view where they're at, right? Because where your income is, right? Anytime you make more, you spend more. And you have to have that understanding of maybe where you came from, kind of when you didn't have that money and now where you have it, it's all relative. So what $50 is to me, to somebody else, $1 million is no big deal, right? And they have to be comfortable with where they're at in life to be able to hone in on that happiness. They have to One of the things I've learned over the past 5 or 6 years of my life is that, yes, while I have a drive for money and money means a lot to me, while I do all these investments and I'm excited about all of this, at the end of the day, that isn't what should make me happy. And that's kind of the soul searching they have to do. They have to get to that point where the money isn't the priority and making them happy. So, I can't really answer it because there's a gamut of everybody. I mean, it just depends on that person. And, we have people that make lots of money that are just extremely happy. They don't have to think about a thing because they know how to manage that. They have their team, they have their attorney, they have their accountant, they have their, another one is trust, have a trust accountant or a trust attorney because there's so many intricate things to deal with all the different trusts that are out there. That's another one to add to the team. But I mean, maybe maybe the two of you could answer that better. Are you happier now? Or were you happier?
Show's over. Show's over. Done.
If I can just take care of my tax problems, I'm going to be super happy.
No,
Oh.
Pay. It's not, the problem isn't your taxes. The problem is you delaying getting everything you need for your taxes until the
I'm a
last minute,
procrastinator.
and then you get stressed
It is.
about it.
It
Yeah.
is. That is it. And that is something else that I love. That's part of my coaching, and part of what I try to teach people is, like you were saying, Nino, you have to stay on top of it so that you know, and don't put it on the back burner, because by the time you do want to do it, or are interested enough, or you have to do it, then you're backtracking a year or even 18 months, right? Because if you file an extension for your individual return, right? So this year, if we get to October, you filed an extension, you get to October and you're still needing to file, you got to go. If you have a question from January of 2024, you're going back, 22 months to figure it out.
Well, and not only that, you're in October, and ideally you're prepping October 20. Now you're doing 2026 tax.
Absolutely.
You should be.
The year is already 3/4 of the way over, and it doesn't help. So, Pay, I'll help you.
Yeah. I was just going to ask. So, hypothetically, asking for a friend. If you have a friend.
I got you, Pay, right? How does one, right? I got you,
Oh
Pay.
my goodness. To close it out, Christina, to answer your question, I always have this study stuck in my head that was cited maybe last year, that they got a group of people at all different levels of wealth, and they asked them, what is your ideal salary level on an annual basis? And the answer, no matter what level of wealth people were at, was always 3 times what they were making. So if they were making $50K a year, they said roughly around 150,000, that would make them become happy. But then people who were making 200,000, that answer was 600,000. People who were making 5 million, that answer was 15 million. So it all went across all spectrums. So we've had people on the show who've worked with high net worth individuals who have explained to us that oftentimes the happiest people are the blue collar workers who make 90,000 a year to feed their family of 4, living in a smaller house and have an old beat up truck, but that's it. But they're happy because they know what they have, they know where they come from, and they're very grateful for that, as opposed to the people who have this inner drive for more and more and more, and know what they're capable of, and therefore don't set a ceiling and just try to accomplish all these different things. So I don't think there's an answer. I think it all, like you said, comes down to the person. And I don't ever think it's too soon to start rethinking your thinking of what money is doing for you as an individual. But I think a lot of that has to do, again, with having a good accountant. Because if you have an accountant who tells you your books are out of whack, like you think you have a high net worth, but look at all the debt. You think you're bringing in all this money, but look at all the money going out. And that just can help you come to a new realization. Again, going back to building a good team. So, Christina, again, thank you for coming on. Pay, is there something you wanted to wrap up with?
I'm going to call Christina later and DM her.
Yeah, DM me.
Well, Christina,
she's been great.
She has been great. Well, I think people are going to listen to this show and think, all right, well, I want Christina. Christina understands things that I don't even understand, because maybe they're still starting out in their stacking journey, or maybe they're about to get an IBC policy, or maybe they have one. They're not sure how to utilize that when it comes to taxes. So if people wanted to reach out to you, are you okay with people reaching out to you? Are you one of those like, I'm fully booked type of people? So can people reach out to you?
Yep, absolutely. Yeah, I'm taking on the world, actually, so I'm good.
Yeah. Selfishly, I want to say she's not available.
We did hesitate. We did hesitate interviewing you because I was like, I'm not sure if I want to give out her information.
Yeah. Selfishly, she's ours. So for our business, that's priority.
You guys are my priority. So there you go.
As long as we're number one, that's all we care about. No, we're only kidding, because we do want, just like with IBC and stacking, we want to share the knowledge. We want to share the wealth. We want people to learn about these techniques. Again, ultimately with the goal of making more money, to have a better quality of life. We don't want to miss that part of having a better quality of life. And hey, who knows? Maybe if you're lucky, you can make great friendships along the way, like Pei and I have had the blessing of being able to do. We met you, Christina, about 6 months ago now, which is crazy. We need to see you again because it's been a long time.
Yeah.
But I think that the sooner you can get along with people on your journey, and if you can build your own team, like we talked about on one of our shows, not only just build a team, but really have a close relationship with your team, and they can understand as you're going through different walks of life and how you might change when it comes to having a family or raising kids, whatever it might be, understanding that things will change and having a good set of people with you along that ride, I think is super beneficial. So once again, Christina, you've been amazing. We appreciate you. We definitely will have you back on at some point to go over business acquisition, a bunch of other things, business coaching, mentorship. So everybody, thanks for tuning in to the Finding Financial Fitness Show. Christina, thank you.
Thank you, guys. Thank you.
Thank you.